What's up, you moneymakers and HCMC ARMY? Welcome back to the channel. This is my update because Healthier Choices Management Corporation reports second quarter earnings for 2023 and financial results. We'll be talking about a lot more information as to what the revenue looks like on July 24th, so before 3 or 4 days. They filed a 10-Q quarterly report earning ending June 30th, 2023. This is a pretty good update and very important as well. Many of you reached out asking for an update. Here I am sharing these details. I'll be covering some of the very important details around how much cash do they have, what is their net sales looks like, what is their cost of sales, which means the margin, because they're reporting record gross margin over $5 million. If you remember the days when they were struggling for $5 million in revenue. Right now, their gross margin is $5 million, $5.1 million to be precise, for the quarter ending second Q2 2023. This is looking pretty juicy. At the same time, I want to also flag some of this caution alert for you as well, because there is a ton going on in regards to HCWC uplisting on NYSE or NASDAQ. So stay tuned, watch the full video. I'll be covering why their EBITDA is down, why their profit margin is still high, gross margin is high, but they're making net loss. So stay tuned, watch the full video. All I ask you in return is to hit the like button, subscribe to the channel, and turn on the notification bell, because I am going to share a video about Lucid, and that is looking pretty stunning. We have been making good money in Lucid this year. Tesla, Lucid, Mullen, and NIO. 4 stocks doing amazingly well. So don't miss out on all that juicy information. Do hit the like button, subscribe to the channel, turn on the notification bell. So on July 24th, HCMC filed a 10-Q, and as you already know, it is the quarterly earning report or the financial statement. HCMC reported the record sale of $13.6 million for the second quarter, which is up $7.4 million year-over-year growth. In addition, they also reported the record gross margin of $5.1 million for the quarter, which is up $2.8 million year-over-year growth. However, they're still in net loss, and that's what exactly I want to cover. But before we go there, let's talk about what are the highlights of this recent earning. Net sales and quarter ending June 30th, 2023, it is $13.6 million. Now, if you know that they are projecting $60 million in revenue in 2023, and I don't doubt they are going to exceed their expectations, because Q3 and Q4 generally are pretty good quarter for HCMC. They booked $13.6 million in Q2 in terms of the sales compared to $6.1 million. So 13.6 is over 2x. So they did more than 2x in revenue, approximately $7.4 million, and it is increased by 121% for the same period that they had in 2022. How amazing is that? Gross margin from operation increased by $2.8 million for the 3-month period, ending June 30th as well, which is $5.1 million that they had in last quarter this year, are $2.3 million for the same period in 2022, which is again gross margin right now $5.1 million and $2.3 million that they had last year, which is up 118% year-over-year increase. Again, their EBITDA, which they book loss, and which is where I want to flag this out, because the more the revenue that they book, their operational cost skyrockets, which is not a great sign for a business, and that's just my personal opinion. I am not a financial advisor, nor am a certified professional, so do your own due diligence, but this is not looking super good, at least to me. 3-month period ending, they booked the loss, approximately $1.7 million versus $1.1 million for the same period last year, and this is their EBITDA. It should be noted that $0.6 million, so a little over $500,000, in non-recurring expenses. So you can imagine that this will not be a recurring expense. This is one time. This could be somewhere around some sort of fees for the lawyers. You know that their lawyer HCMC and Philip Morris lawsuit is going on. There's a PTAB application and there are a lot of things into the mix, and they're also working on uplisting HCWC either on NYSE or NASDAQ. So that might be the expense that they're talking about. It was incurred during the 3-month period ended June 30th, 2023. Now, this is the 6 months outlook. Net sales from the operations for 6 months period ending June 30th amounted for 27.1 million. Compared to 11.2 million that they had, which is approximately 16 million and approximately 16 million, and record 143% increase versus the same period in 2022. So their net sales has tremendously increased. Their gross margin from operation increased by approximately 5.7 million for the 6-month period ending in June 30th, which is amounted to a record sale total of 10 million compared to 4.3 million for the same period last year, which is an increase of 132% year over year. Adjusted EBITDA loss for this period amounted to approximately 3.2 million versus 2.3 million. So you can see that 3.2 and 2.3, which means their net operating expense or EBITDA skyrocketed. It should be noted that 0.9 million in non-recurring expense were incurred. So close to $1 million, it is non-recurring expense for this 6 months period. Again, in lawyer fees, in uplisting fees, or some of the SEC filings that they have been following up and getting professional help, so on and so forth. Jeff Holman, their CEO and executive, mentioned that we're pleased with the record second quarter results. We believe our long-term sales growth strategy is fast achieving traction as evident by our positive sales performance. Mr. Holman concluded our results reflect the continued trajectory of year-over-year revenue and gross profit growth. We're encouraged by our performance in second quarter, which gives us continued confidence in our direction. Now, I want to also review their balance sheet. So here is their unaudited balance sheet. Condensed consolidated statement of operations. Again, remember this is unaudited. So if you think about the 3-month period in ending June 30th, so Q2 2023, they booked 13.5 million. Now why I'm showing you this is more visible, more readable. We also saw the highlight, so it is slightly repetition, but this will help you visualize data and compare side by side. 2023 net total sales in Q2 13.5 million compared to 6.1 million. Cost of sale 8.4 million and 3 compared to 3.8 million that they had in 2022. All in all, their gross profit is 5 million, little over 5 million in Q2. Last year, this quarter, 2.3 million. So all in all, as you see, their profit doubled as their net sales doubled, right? Now, this changes the story with the operational expenses. Take a look. 8.2 million is the operational expense in Q2 compared to 3.6 million. So it did not just simply double. It is a lot more than double. So 3.6 times 2 is about, give or take, 7.2, 7.3 million, because this is almost 3.7 million, right? So 7.4 million. So instead of 7.4 million, their operational expense is 8.2 million. That is putting them at a net loss from operation 3.1 million, which is a massive, massive loss in my opinion. They did have the loss last year, this in Q2 as well, 1.3 million, but this time it is over $3 million, which is concerning to me. Now, total net income expense is $526,000 compared to $22,000. That puts the overall at 2.6 mil, which is almost double. But what my point is, if they can reduce their operational expenses, because this is humongous operational expense that you see on my screen, 8.2 million operational expense for $13 million sales, which means it is there are opportunities. There got to be some opportunities. I'm not sure exactly what they're spending, but my hunch is they're spending a ton more on human resources. Yes, the payments and the payroll, everything goes up, but and inflation is going up as well because net cost of sales, yes, it goes up. But if they buy in bulk, because now they're selling 13 million, 15 million, 17 million, big numbers, they should be getting, they should be frugal when they are trying to buy with their raw material, which is cost of sales, and they should be extremely frugal with their operational expenses. Their operational expenses are as big as their cost of sale, which I cannot really recognize why they're doing that. And that puts them at a net income loss or net loss from their continued operations at $2.6 million. Now, if you think about the last 6 months in 2023, total year-to-date, you can think as year-to-date revenue, right? 27 million. This is exactly what builds confidence that they can go above $60 million in revenue that they're targeting for, right? So 6 months, about 27 million, and which is why I'm saying that they will exceed that $60 million target that they have. But cost of sales, 17 million, that puts them at close to $10 million in gross profit. But guess what? Operational expenses, 15 million, that puts them at $5.1 million of loss, as you see right here, which is concerning again. Now, all in all, they lost $4.5 million in 2023. Major reasons are operations and cost of sale, but operations are tremendous because operation expense 15 million and loss 4.5 million. If they cut this operational expense in half, now don't ask me how they can do it because I don't run the company. Their executive needs to figure things out, and they should put the target of operational expense, cut down operational expense by 50%. Big corporations, big tech, and a lot of financial institutions, they're cutting operations, they're cutting expenses, they're cost cutting, and HCMC needs to learn from them. And they need to figure out, and that will put the company at that would have put the company at 5 million or maybe $5.5 million in profit in 2023. But that's not the reality. Now take a look what happened in 2022. 2022, yes, the revenue 11.1, but they also had lower expenses, and that they put them at 2.6 million in loss. So last year, 6 months, they lost 2.6 million. Right now, they lost 4.5 million. So in my opinion, I don't really care if they increase their net sales, if they cannot really increase their income, or if they can book more and more loss, the revenue does not matter. And that's me personally. Take it with grain of salt. 3.1 million loss from operations, and all in all, stock compensation 1.1 million, adjusted EBITDA 1.6 million compared to 1.1 million that they had in 2022. With that, I wanted to also show you the balance sheet and how much assets that they have on hand. And again, this is condensed consolidated balance sheet that you want to look into. $8.4 million that they have in cash compared to $22.9 million. So they had almost $23 million cash at Q4, end of Q4, December 31st, 2022. Right now, they have $8.4 million. So let's find out, where did the cash go? Take a look right here, $6.4 million. Current asset. Total current asset is $14.9 million. So think about like $15 million that they have in total current asset compared to $30 million, which cut in half in 2023. Other assets, $24 million remains the same. $24.9 million remains the same. All in all, their total asset $39.3 million compared to $55 million. So again, we need to figure out where the $15 million go. So let's take a look. Current liability, number one, you need to think about why their cash is low right here, because they are booking losses, right? Every quarter, you're seeing 1 to 2 million more or less loss. This year, they lost about 4.5 million. Let's go back up and verify. Right now, up to this quarter, they lost up to Q2 in 2023. They lost close to $4.6 million already. So you can think like from 23, 17 is almost so about $5 million out of that $22.9 million cash bucket just went for losses, right? Current liabilities 8.6 compared to 9.9. So this is looking pretty good because they are working on their current liabilities. Other liabilities 10.4 million, which comes down to pretty much same what they had last year. So this is last year, at the end of last year, what they had on their balance sheet. Right now, this is 6 months ending June 30th, what they have on their balance sheet. Total convertible stocks, this is where the money went. So take a look, 20.2 million that they have, and they had 34.9 million. So all in all, total liability unconvertible is 39 million from $55 million liability that they had in 2022, at the end of 2022 rather, on December 31st. So this is where the money went, as you can see. Now this again you can find out on sec.go. You can see the detailed report. You can also see the stock compensation, what exactly they are doing, and all the nitty-gritty detail in more than narrowed down. So you can go right here on sec.go, go and search for HCMC, and you should be able to see this kind of a view that you see at the latest filing. You should be able to see on July 24th. You can click on it and find out the 10Q. With that, I want to also mention that what company is doing. We saw the 5 different buckets, if you remember, their business units, right? Since they started working on NYSE, and I'll do a separate video as to where the company is, as to what you can expect in terms of the HCWC uplisting and where we are. But I just want to touch upon real quick because I got some questions. We don't know when they're going to, long story short, TLDR is, we don't know when they're going to get uplisted on NYSE because we do not really have any update. Their intellectual property is a separate LLC, as you can see. It's HCMC Intellectual Property Holdings LLC, which is under Healthier Choices Management Corporation. There is this lawsuit going on with Philip Morris, which we are not really hopeful at this point. PTAB really rejected that their patent is patentable. They're fighting that battle, which is going to be a hard battle. And the federal judge mentioned that they will need to wait for the patent because judge may not want to waste everyone's time. Why? Because if the patent becomes invalid, or the PTAB stays with what their verdict is already, regardless of the appeal that HCMC has filed, and I'll cover in my separate video, so look out for that video. But again, we are not super hopeful for that. Second one is their Healthier Choices market, which is making the most revenue for HCMC. Also, it's a fire pit, for money pit for HCMC as well, where they burn all their cash. We saw that $4.5 million loss for this year. The vitamin store, it's their online arm, and Healthier Choices Wellness Center, which is again their licensing arm, if you will, that is helping them boosting the revenue without putting in a ton of resources. Take a look on their site. You can find out all these details on their site. So go to healthiermcm.com, click on this news, and you should be able to find out the Q2 report. Now, one thing you also want to understand that sometimes there is some lag or delay before they can post this on their website. So I do my due diligence on other digital platforms as well to find this information and share it back to you. Healthier Choices Management, you already know that there is no update yet, but I just wanted to cover so you don't have this question. They announced the postponement of the record date for the spin-off of Healthier Choices Wellness Corp, which is HCWC. The stock is not trading much, as you can imagine, because the focus is on HCWC. Volume 80 million, so the volume is drying down. The average volume is also drying down. The stock is trading between 0.0001 and 0. Naturally, because there is not a ton of interest, people are not really interested in trading in HCMC. Right now, they're focusing a lot more on what is going to happen with HCWC. Take a look. We saw the volume decline pretty heavily. Before, we used to see about 200 million in volume, 300, 400 million. We saw 1 billion, 673, 547, so on and so forth. Again, this is an OTC stock. So again, that's a challenge as well. But take a look, 80 million, 105, 97. So the volume is declining. That's the long story short. I hope you like this update. Stay tuned. I'll share another update on HCWC, what is going on with their uplisting, also what is going on with the lawsuit, all that kind of juicy material information for you. I'll come back to you within the next few days. Stay tuned, hit the like button, subscribe to the channel, and I'll see you in the next video. Thanks for watching.